Hello, everyone, and a very warm welcome to today's major markets update for June 16, 2023. June 15 was yesterday. Completed. I think we have completed all the smallest of smallest waves, the nano 5, of the micro 5, of the minute 5, of the minor 5, of potentially the largest B wave you've ever seen. Caution is advised. Please think of your risk management because this could be a top for a long time to come. It doesn't have to be, but beggars can't be choosers and pigs will get slaughtered. So no time for complacency. Absolutely no time for complacency. So please take appropriate measures if you are like a swing trader or whatever type of trader. Ratchet up those stops, take partial profits, all those good things. My ETF trading alert systems and secret services have continuously been selling into strength. We've been, for example, long Apple since already January this year, and we only have 25% of positions left. Just send out an alert. We keep ratcheting up those stops. If you're not a member of those secret services, I think you've missed out on a lot of easy trades, but that's on you, not my problem. I really think so. It's been a wonderful, easy trade for all those that signed up for it. It's been fantastic. And now I think we're going to go a little bit towards a tougher regime. But remember, this was the bottom line from Wednesday. We're wrapping up the smaller waves, and wrap up has been completed after these extensions of extensions. Now, talking about extensions of extensions, a lot of people contact me that, how do you trade this? Well, first of all, we have our target zone. So if the first target zone is reached, take some chips off the table, go all cash, ratchet up stops, whatever you want to do. Make sure that you lock in those profits, either directly by selling or by, for example, going partial selling or ratcheting up stops, whatever you want to do to make sure you lock in those profits. That's the way to go. But when it keeps on going higher, then you buy the breakout and you place appropriate stops, as I often try to convey in my updates, where you should potentially place those stops. But your stops and your risk management and your trading strategy might be different, especially if you use options, for example. Options are quite different. Options you have to deal with in the money, on the money, out the money, what time frame, all that stuff. I don't do options because I have no time to figure all that stuff out, because I also need to track the indexes so I can do these updates. So if you get extension upon extension, you just keep doing it over and over again till it stops working. So then you'll clock in winning trade after winning trade, and eventually it won't work anymore. The longs won't work anymore, and you realize this is over. That's why I place, for example, levels on we can't overlap with this high, and we can definitely not make a lower low below yesterday's low, because, for example, in a impulse, we need to see higher highs, higher lows, higher highs, higher lows. All these third and fourth waves, fourth and fifth waves, that type of stuff we want to see. If that falls apart, if we start to see overlap between current price action and previous low, it starts to suggest this impulse pattern is dead. Okay, and then we need to be cautious and start to switch our attention to the downside. So if we keep extending, it happens. It has been extending for about 2 weeks now. It happens. We always know it can happen. We just don't know with certainty beforehand. That's impossible to know. So when a index ticks off all the boxes, it bottoms in the second wave top, bottom. It tops in the third wave top, right at 161.8. It bottoms at 100% extension 4 wave 4 after reaching 161.8 for 3. Of course, all you can do is say we're going to go to the 200% because that's the standard stuff. What then the market does is, okay, I'm going to go to the 300% or 400%. Yeah, that I cannot tell you, but we can monitor for it, and then we see those extensions. And I've pointed that out many times on the charts. So you are aware of it, that can happen. Trade it accordingly. Okay, well, we broke out of the 200% extension. Okay, then we're going to go higher. Trade it accordingly. Okay, and take profits along the way. Can trade a little bit smaller, so you take less risk, because of course when you start extending, at some point we're going to retrace this entire extended wave. That said, if you have any trouble with trading these extended waves, please contact me. We can get on the phone for all I care and have a good conversation about it. Anyway, moving on to the S&P 500. In italic, or to the NASDAQ 100 first. In italic is what we had on Wednesday. Ideally, 13,810 to 40, and a NASDAQ 100, 15,170 to 270. What did we get? 13,864 today, off by, excuse me, 24 points. And the NASDAQ 100, we were off by 14 points. Absolutely freaking nailed it. Absolutely freaking nailed it. And that should be it. I think high caution is advised. We've reached all these upside targets. High caution is advised. S&P 500 on Wednesday, said we should see a micro 4, micro 5. That was the Federal Reserve low, was the micro 4. We topped at exactly 161.8. And then we would like to see 44.10, 44.40. What did we get? 44.48. It doesn't get any off by 8 points on almost 4,500 points. It doesn't get any better than this. How did I trade it myself? I went long pre-market, SPXL, and I sold it at the open. Boom, done. And I haven't touched anything since. I traded a couple of miners and GBTC ETHE, which follow the cryptocurrencies because the cryptos are ripping. And I think the money is moving out of the stock market into cryptocurrencies. That's just my thought, as we have no quantitative easing anymore. So liquidity is limited and it's going to move around. It's just going to find its next opportunity. So we got 4,448 on all the wave degrees from the 5-minute chart I shared with you yesterday till the daily chart. The wave count looks absolutely utterly complete. Okay, so below 4,165, that's how low we need to go. There's still a ways to go. It means either today was the B wave top, or we are in a larger wave 4 with another wave 5 to come. I'm looking now for an ideal pullback to 4270, 4310, and another 5th wave. Okay, so not saying the top is in. I don't have that yet, but if that's the case, you better make sure you have, of course, the right stops in place and not fully exposed anymore, and make sure you get out when the confirmation is there, or preferably before. That's on you, so please consider this your warning. Semiconductors, we said it should be wrapping up wave 5 of 3, etc. 3750, followed by another wave 4, 5 sequence. Can still do this wave 5. This could be in a smaller wave 4, but the risk for the stop is increasing as well. Dow Jones, the hourly and daily chart suggests the top is in, either for a wave 1 today or a B wave. That is then the daily chart based on different wave counting, as I use also objective Elliott wave. And I'm looking now for a pullback to 33,600 plus or minus 300. If we go below 33,000, it starts to suggest we are not going to see another rally. The IWM is messy. Caution remains advised. Sentiment is extremely bullish. It's not been this bullish since 2000, pretty much. Seasonality headwind until the end of the month, but that you should already know. So I have a lot of charts to cover, a lot of stuff. And remember, already in October, okay, we already said we're going to look for a multi-month rally to 4,300, 4,400, potentially 4,500, okay? And it's still possible we can go to 4,500, 4,600. It's still possible. But even 4,500, 4,600 is only 100 to 200 points up from where we currently are, with a downside risk to 2,800. So your downside risk is 1,200 points, yes, and your upside reward is 100, 200 points on a intermediate to long-term perspective, next couple of weeks to months. So please take that into consideration. I still have zero evidence we are in a new bull market. If anything, I don't think sentiment should be this extremely frothy when we just bottomed a couple of months ago. Honestly, we're only 8 months in since the low in October, and we are already at extreme bullish sentiments that normally go inside very large tops and not as much as a intermediate just rally. So this is the alternative wave count that we indeed have topped to 5 of C of C of C of B. Okay, it is possible. The NASDAQ will need to go. I'm going to change this chart. We'll have to drop now below this level. This is the cutoff. We take this away. We've extended. Okay, we've extended. We'll take all these target zones away. Excellent. nice, we've reached it all. So now we need to drop below 12,225. 12,225 is equals to bounce over there. So still have some ways to go. Why? Because then if this is a wave 3, right, 3 can't overlap with wave 1. That's why. Okay. That's it. Very simple. Alternative is 3. We get the pullback for 4, another rally for 5, another drop for 4, another 5. So also here, again, today we topped at about 13,800 plus, and we're looking here at about 14,700, something like this. So it is 900 points upside versus eventually thousands and thousands of points downside. Please keep that in mind. Okay. NASDAQ 100, same deal. We've reached the ideal upside target zone, nailed it. Looking for a 4, a 5, a 4, and a 5 like this. Potential, of course, the same wave count that we have completed all of this C/3. I prefer this one, that we see this seasonality weakness into end of the month. Then we see July, August, September, and that's about it. I still have zero confirmation that we are in a new bull market. What is a new bull market? We need to see new all-time highs. Everything else is still to be considered a bounce until proven otherwise. All right. Even new all-time highs not a guarantee that we're in a bull, as we saw in 2020, which was a B wave high. But the wave count from the October lows does not give me a warm, fuzzy feeling. I don't see a 1-2-1-2 setup. The rally here from October low into December, I cannot make this into an impulse. I need to see loud and clear 5s up, and I'm not seeing it at all. The 5 waves are materializing since the March low, but that is then part of a C wave, which are 9 out of 10 times 5 waves. All right, so know that difference, that the initiation move was, in my humble opinion, not 5 waves higher, unless this is some sort of very wicked leading diagonal that I am simply unable to elucidate at this moment. Excuse my limited mental capacity in that sense. All right. And remember, when we started, I think it was already posted in June last year, that we were looking for a low in the S&P 500 at around the low 3000s. And then we start off with a simple assumption that we're going to see a zigzag higher, right? B waves are 3 waves. B waves can be a zigzag, a flat, or a triangle. We start off with the simplest assumption, and that is that we'll see about a 50 to 62% retrace. That is normal, standard to be expected from a B wave, with the knowledge that the B wave can stall at 23.6, but also go as high as 76.4%, even 88.6%, or even become irregular. It all depends on if the wave down from the all-time high into the October low was 5 waves lower or 3 waves lower. That remains still a little bit up in the air, but if we get 3 waves lower, we can get 3 waves higher that make a new all-time high as an irregular B wave. But we start off with 62% plus or minus. So that's why we come up with 4,300 to 4,500 on the S&P 500. Okay, let me show you that here on the daily chart. So you start here with 4,300. That's normal to be expected. And this is something you can already foretell a year beforehand. And darn it, did we get very close, very close. You can look at my articles on investing.com. And then we knew in October, if we started to break above, I believe, some 3,600 level, this or 3,805 level here, this one, then we knew we would go to at least 4,300, potentially 4,400. Okay, that was the standard assumption for this around 62% retrace, plus or minus, of course, 100 points. This is as accurate as you can be. And of course, we don't know beforehand. Once we're here, we don't know exactly how this is all going to fill in. That is, of course, near impossible to know. Nobody knows how it's going to happen. All we know is it's going to get there. And if you understand that and have peace with it, then you have an amazingly powerful tool to your disposal. If you're going to get hung up on all these daily little scribbles and all that stuff, I don't know what to tell you. I really don't. If I want to tell you, it's not going to be pretty. So that said, we have reached what we thought we would reach. Some extensions, definitely higher. It's okay. 88.6% is still also a normal retrace. That's what we start off with. And then we That's what we anticipate. We monitor it. All right, we get a little bit higher. So effing what? Move on. All right, trade it accordingly. And that's it. Let's go to the NASDAQ 100 hourly chart. Also, that one, I'm done with the waves. We had to this wave 4 target zone. We should have reached 15,170. Oh boy, we got 15,284. Is this as close could be? I still have no confirmation that the top is in place, but it looks good. I mean, I'm pretty much done wave counting. Also for the S&P 500, if we go to the 5-minute chart that I shared with you, again, we've got the extension. This blue wave 3 should have topped here. It didn't. It went a little bit higher. This blue wave 4 should have bottomed here. It didn't. It went a little bit higher as well. And then today's gap up and drop looks classic 5 of 5 in my humble opinion. Unless this is still a 4 and we get still a 5, oh boy, I don't see it. This is to me as good as it gets. So we can have then completed this C/3 wave. We get a 4th wave and another 5 wave. So please keep that in mind where this 4th wave should ideally bottom. Dow Jones, this is the daily chart. We have 5 waves up, 1, 2, 3, 4, 5, into that is Tuesday's high. Then Wednesday's low is an A, a B, and then a C wave to come. That would fit quite nicely with the hourly chart where we have a better looking impulse, 1, 2, and then 1, 2, 3, 4, 5, again, based on Fibonacci extension. So you can see how we sometimes wave count differently based on the patterns of different time frames. But it aligns very well. Then today's top would be wave 5 of 5 of 1. We had 5 waves up from yesterday's low, 1, 2, 3, 4, 5. I'm super content with this. And then we should look here for, again, a 50% retrace would be normal, 33,600, but we can always extend. And again, if we go below 33,000, then it starts to suggest that we don't get this second wave anymore, and that we have something entirely different. Then we had an A, a B, and a C of a, I would say, yeah, irregular expanded flat. So this would then be a larger B wave. This is A, this is B, and then we crater lower. So we know soon enough, below 33,000 is going to be a severe warning that we're not going to see the 3, the 4, and the 5. Okay, but if we take into consideration seasonality, if that still has any bearing on the market, and we have to use it as a general roadmap until it doesn't work anymore, we should see this, right? This wave 2, and then a rally. And remember the oil Dow Jones relationship, looking for a top somewhere August, September this year before the big fat crash happens. So that aligns still well. We're going to use it as a roadmap, but don't be complacent. Don't say, oh, well, nothing at all. Yes, we can go much lower, and then this high is just simply a bounce. This is just a general path, not necessarily that we follow the exact path in percentage gains. This is just what we should see. This was looking for a top somewhere around June 12 to 13. Okay, so we're getting awfully close to that one. This is all plus or minus a couple of days. So it looks good. I'm ready with that one to say it's complete. Semiconductors. Today's high could be, for example, gray wave 5 of 5. So we could have completed this entire impulse that started in, I would say, late April. So we could have completed this, and we're going to go lower for this wave 4. Alternatively, we get one last gasp higher. I prefer it, I must admit, but technically there's enough scribbles in place to consider the rally complete. Please keep it in mind. This is as good as gets. Warning again, cutoff is here. That hasn't changed. So please keep it in mind. We go below those cutoffs. Oopsies, because then this potential wave 4, right? This potential wave 4 is overlapping with the top of wave 1, and that's not allowed in a standard impulse. So S&P 500, I shared this chart with you. It looks completely complete with 5 of 5 of 5 of 3 there. 4 was yesterday's close, pretty much. Today's open is 5. Alternatively, we're still in 4. We're still going to get a 5, but at this point, beggars can't be choosers. This is then the hourly chart. The hourly chart looks also better for this completion Again, shows the extension. This was the ideal wave 5 and 5 and 5 and 3 target zone. And we extended a little bit above it, even above the 200% extension. All right, fine, as is. Then we have 1, 2, and then 3 and 4. Yesterday's pullback was 4, and today's open and pop and drop was wave 5. And we should now be in this green wave 4. That's my preferred scenario. Will be confirmed on a drop below Wednesday's low. 42.68, 43.07 ideally. We drop below 42.65, then this wave 4 is, in my humble opinion, too deep. And I'm going to look here for the next target zone for the alternative wave count of this wave 4. So we could have topped for 3, a larger 4, and then a larger 5 yet to come. Okay, so even this one suggests that we could see quite an extensive pullback, a couple of hundred points, before we move higher once again to about 4,500, somewhere around there. And again, it's still the realms of possibilities, 1, 2, 3, 4, 5. Again, it depends on how you wave count this A, B, C, or A, so A, B, 1, 2, or I should do A, B, C for B. It depends a little bit on how you wave count it, because here we have the B wave in March instead of December. And it also suggests that we should do a 4. Sorry, there is a label here that should be there. There. And we'll get a final wave 5 to about 4,500. Okay, so this 3, 4, 5 matches with what we see here, 3, 4, and 5. Okay, so that matches as well. So again, a lot of downside, reasonable downside. And here it is a lot of downside. And my long-term standing target has not changed at all, around 2,800, okay, for this C wave, lower. So very early days if that is the case. IWM, yeah, what a mess. This looks more like some sort of triangular B wave is forming. We can still do a 4 and a 5. This wave 4 can even overlap, but below 180.03, and I don't give it much more. So this is a market I wouldn't watch. Now, how are we doing on sentiment? Extreme. This is extreme. This has not been seen in many months. What are we doing on AAII sentiment? Extreme. All right, 45%. This is 1 to 2 standard deviations away from the norm, and the historical average is 37.5. So that often means we're getting close to extreme sentiment readings. How we're doing on money manager exposures dropped a little bit this week, but still above average. So this could be a topping pattern as well. How are we doing on VIX? It's also once again in a bottoming zone for the VIX divided by the VXV, extreme complacency matches as well. I can show many tweets, for example, from McClellan and other people that have done some really good research and alignment with other indicators that suggest also quite the complacency and topping pattern. 0.52 on the put-call ratio yesterday is quite low. Greed matches. And if we do then the 10-day moving average of it, we start to see also here we are much closer to the top than we are to bottoms. How we're doing on the PMO indicator? Well, as we knew, we're topping out on that one in the ideal topping zone. But again, those can take a while before they eventually start to turn into a sell. But this is also suggesting closer to a top than to a bottom. How we're doing on the McClellan oscillator was definitely nice and high yesterday, but of course, see some divergences. And this will mean that, of course, the summation index is still on a buy. Let me pull up this chart here, still on a buy, and that I'm looking here for this negative divergence to kick in, meaning we're moving higher and higher, with actually less and less internal strength. All right, so I think that should cover it all for today. I only have a couple of minutes left based on my free subscription, because I'm too cheap to buy for a full subscription for Zoom. 45 minutes is long enough. That's the reason why I do it, so it makes sure that I do not do any webcasts longer than 45 minutes. I try to keep it under half an hour. I've talked way too much, and I can still say much more. But again, everything's complete. I'm even if we see any more upside with the smallest of fifth waves left, I'm not gonna really be too much bothered by it. I think we are very good. We've reached these ideal topping zones. Look, this was the ideal topping zone right there, this narrow little target. Okay, we had the 61.8%, under 38.2%, under 61.8%, and we got there completely. Same here for the NASDAQ 100. Look at that. Nailed it. Okay, so wave counts look complete. I'm starting to look for a pullback, at least for the next 2 weeks. How this wave 4 is going to fill itself in. Looks like a zigzag, if I may admit, because wave 2 here was a flat A, B, C. So this should then be a zigzag. And then I'm going to look higher again. But I know if we start breaking below the March lows, the B wave top is in. So I don't have any significant sign yet that that is the case. I must admit, with the technical indicators the way they are, it looks like a pullback, a rally, etc., to really turn these indicators down while price goes higher. Would be really, really nice. And of course, by then here, everybody would call us an idiot and thinking that this is still only a B wave. But remember, we then still below the full extension of the retrace of the rally since the October lows to retrace the drop since the 2021 all-time highs. Yeah, remember, we're soon more than a year away from all-time highs for some of these indexes. So that's quite something. That's all I have for today. Take care, trade safe, and I'll see you all next week. Bye.